good evening, everybody. I'm Lee Seiler, also known as the Stock Doctor, and welcome to the Hump Day Market Update. Today is May 20th. May 20th, and again, thank you for joining. I know a lot of you will be watching this after it is live, and that's okay too, and that's okay because we're trying to be, we do it after the close because we're trying to be as timely as possible. But before we get started, let me go over a couple of things. First and foremost, and this is really an invitation to everybody because seriously, I am renting the Shred It truck on Saturday, May 30th. From 12 to 3. I called today. We do have that option from 3 to 4. I'll have beers, we'll have music, we'll have all kinds of stuff going on in the parking lot of my office. So if you have crap that you've gathered, old tax records, old business records, whatever you've done, you need to shred, parking lot of my office in Longwood, and hang out with us. We'll do 12 to 3, 3 to 4 if necessary. But literally, bring your neighbors because it doesn't matter. Because as long as quickly they can shove those things in the truck, that's okay. Or else they're going to sit around for a while. So let's get them working. So again, that is Saturday, May 30th, from 12 to 3 p.m. And yes, we can go to 4 p.m. if need be. So the number on the bottom, it wouldn't hurt to say, hey, yeah, I'm going to show up. So at least we know that if it's getting close to 3 o'clock, we'll say, hey, you coming or not? And we can send them away, all right? So that's the number on the bottom. That's also the number you can call if you have questions. We have folks here manning the phones. We have Nikki Ward. We also call her the Mega-lennial, and she is one of our financial advisors. Jared Bocart, another financial advisor. He specializes in the teacher market. Strapping young lad. Question is, what do you specialize with the teachers? This is what I want to know, Jared, but we'll figure that out at some point in time. Anyway, again, thanks for joining. Okay, so now that we've talked about Shred Day, and I want to do one more thing. I want to talk about our podcast because we're getting some leverage there, and people are starting to like it. And the podcast is not just me droning on for 20 minutes, because normally it's about 20, 30 minutes. It is my whole staff, all the financial advisors. We have a lot of licensed people in this office, and one of the questions we had tonight was, what exactly do you guys do? We'll talk about that in a little bit. We also have several questions. I'm looking here at buy, sell, or hold, which I love doing. This is the format we did on our radio show for many, many years. And, we're pretty good at it. And what I'm going to do is I'm going to give you my opinion, not the opinion of anybody else, not the opinion of my broker-dealer, which is International Assets, not opinion of Solid Wealth Management. It is my sole opinion. So you can like it, not like it. And I suggest you don't take any direction unless you are a client of mine or you're a client of somebody else's, and ask them before you actually do anything that we talk about today, because some of the questions will be based on some more aggressive type investments, and they may not be suitable for you. So we want to make sure that anything you do is suitable for you. So the last 2 Wednesdays prior to today, I'd said, market was down the last 2 Wednesdays. We're down 2%, 3%. Now, since last Wednesday, and I'm going by last Wednesday, the Dow, which I know you love the Dow, large numbers, up 5.7%. The S&P lagged a little bit, up 5.3%. The NASDAQ up 5.7% also. Here's where I'm really beginning to see the value in small cap stocks. Okay? The small cap, I just shook my bar. The small cap stocks have really been a laggard throughout this whole process. Throughout this whole, actually, the bull market, they didn't really participate. Not a lot. I mean, they did. They went up. But now, I think things are changing here. And we're going to be making some changes in our portfolios to reflect that. So, small caps are just the smaller companies. Publicly traded. I'm looking for the ones that can pay some dividends too. So we're looking for quality. Look, everything we do has to be merit-based. Okay? And I'll get to that, but we're fiduciaries in my office. All of us are fiduciaries, the ones that are licensed, not the administration staff, which, by the way, they're great too. I feel like I'm the president. They're great. It's great. We're all great. Everything's good. You're great. Oh no, wonderful. It's great. I never use wonderful, by the way. So what we try to do is look at everything on a merit basis as far as every investment we look at. Whether it's a mutual fund, whether it's an exchange-traded fund, and we're going to have one class on that alone because a lot of people are getting a lot of questions on exchange-traded funds, which I think is a really big part of investments today, or individual stocks. And really, when you look at individual stocks, it becomes more important because you really need to, when you buy a stock, you own something. You are owner of a company. You are part owner of that company. Whether you own one share or a million shares, you are part owner of that company, which gives you the right to go to the shareholder meeting, gives you the right to vote. Okay? So everything we have to look at is really merit-based. And today, the Dow had a pretty good day, the markets across the board. But going back to that theme of small cap, and I'm not telling you to put 20% of your portfolio in small cap, and that's not what we would do either. But there's some things we're going to do, and clients that are going to watch this, or watching now, or will watch this, will see, because we do make moves. And during the crisis, when things were really bad, the market was tanking, we were making moves, and that's something that most. I'm just going to tell you right now, and I'm trying to make room. I don't have a coaster in here, but I'm making room. Believe me. Okay. For my cocktail, by the way, I want to thank also Fuel Barbecue. Fuel Barbecue, thank you. Now, I didn't need another bottle. Last week you gave me, by the way, Stevie Q, this is for you, Woodford Reserve, okay. Fuel Barbecue, best barbecue in Central Florida. You can find them in on Park and Second, downtown Sanford. Fantastic, all right. I like the burnt ends, and it's really old school style barbecue. Love those people too. They're great people, and certainly they deserve your patronage. Okay, and not to mention they've earned it too. So what you're looking at is a lot of these. What we do, we're money managers. Okay, manage money for a living. If you go through Fidelity, or go through Morgan Stanley, or go through Merrill Lynch, or go through Edward Jones, all that. What they're doing during that March 23rd time when everything's hitting a low, and they're probably hiding under their desk. No offense, and they're friends of mine. I got all these guys are friends, but I'm just telling you they're not making moves, all right? Because it's uncomfortable to make moves when things look like an absolute abomination. Okay, but a lot of these guys out there, the best investors in the world, the Warren Buffetts of the world, the Peter Lynches of the world, they always have one common theme: is you want to buy when there's blood in the streets. And I had somebody today, and thank you, by the way, Mark, for calling, and he's a recent client. Just to give you an example, he's a recent client, and most of the other firms that you work with are going to take that money, dump it right into their model portfolios right then and there, with no regard to what's going on around them. And that's nothing against them, but that's just the process, because our way takes more work, okay? And unfortunately, we don't earn more in fees, okay? But it takes more work. And so what we do is that we actually see when there's opportunities. We're not going to dump it into a model. We do have portions of our portfolios that we use, and we're models. So here's what we do. We assess the client. We love to have in-person meetings. If not, phone's okay. And guess what? I'm a technology moron, but I've learned how to do Zoom. Have I learned how to do Zoom? Well, with some help, I can do Zoom, okay? So we look at your personal situation, and most importantly is we want to know what your objectives are. Are you an income investor? Are you needing growth? Are you a combination thereof? There are a lot of that these days. Give you an idea. Retired clients, they're more conservative, but they still have needs as well. They still need to have their portfolio grow, because here's what happens. If your portfolio is in a money market or a CD, if it's taxable especially, you're going to likely lose money. Rates are at all-time lows, so I'll give you a great example. The 10-year Treasury, which is regarded as one of the safest investments in the world, one of the safest securities in the world, a 10-year Treasury is going to pay you 65 basis points. That's 0.65 of 1%. If you live on your income, you're screwed. Okay? So most of my clients, and I'd say the majority of our clients, are pre-retired and or retirement age. That's kind of where I fit. Although I'm going to work for a while. But, so we, as a staff, and we get together on all clients, we discuss it, figure out what your objectives are, and most importantly, I think this is extremely important, is your risk tolerance. How much risk you're willing to take. And that doesn't mean that you can't have stocks because, first of all, rule number one is all stocks have risk. I don't care what it is. All stocks have risk. The more stocks you own in a portfolio, the less risk you have to the whole portfolio. It's a numbers game. That's why mutual funds, if you own a mutual fund that owns 200 stocks in it, it's going to be a lot less risky than owning one stock. I don't care which one it is. It could be Apple. It could be Disney. I don't care. So, when you own portfolios of stocks, hopefully some are going up, some are going down. A true diversified portfolio means that when everything's going up, there are some things going down, and vice versa. So we'll accumulate. If you're an accumulation investor, you need growth. That's fine. That's usually the younger people. Most of our retired accounts are balanced, meaning they have usually a 60-40 portfolio-ish. Could be 70-30, could be 50-50, meaning 60% of the portfolio is equity-based, meaning stock market-ish based. The other percentage is in fixed income, things that create interest, dividends, bonds, etc. A lot of clients do have combinations thereof, so that's what we do. Now, one thing that we're always looking for is opportunity. And I was just talking to Jared and Nikki before this. And again, we have, all right, I got that, Nick. We have some questions that we are going to do some buy, sell, hold in a little bit. But opportunity is not worth a damn unless you have the money to capitalize on it. I look back in the real estate debacle of 08, 09, and 10. If you were lucky enough and had the resources to go out and buy real estate at that point, you did really well. Same thing with stocks. If you were able to buy stocks at that point, you did really well. On March 23rd, when the market hit its low, which, I called, it's not going to retest that low. Not this cycle. I think that's done. But I was probably, if you watch CNBC, which I do all day long, I was the first one to say that. You can't capitalize unless you have the money. All right. And, I think one things that I look at, and I've learned in my career of 32 years, is that I look for things to be in that, and this doesn't happen all the time. It happens rarely, actually, where things get so disconnected and disjointed that it's like, wait a minute, that doesn't make sense. This is telling me something. And that's the energy play that happened a month ago, 3 weeks ago, whatever that was, where we picked up some energy exposure when energy is trading, or the WTI is trading at negative 37 a barrel. Okay, did that make sense? No. So you have to have, and that's the difference between being a passive investor and an active investor. And we are that for our clients. We're more active. We're not traders going in and out because we want to have a long-term focus. That's most important. In all investment plans, if you're not a long-term investor, then you shouldn't be in the stock market. You really shouldn't, because nothing turns a short-term trade into a long-term hold better than a stock or a market going down. Believe me, okay? I have done this over and over again. So, once we find out what the type of client it is, how much risk you want to take, then we start developing a portfolio. And the portfolios vary. They're different. I mean, everything is different. All our portfolios are really, they are custom. And one thing I look at sectors. And let's talk about that, because what you're seeing here in the marketplace right now and sectors are very important. In fact, 80% of the reason a stock goes up is it's in the right industry group and or subgroup. So the top sectors right now, what do you think they are? I mean, that's a question. Rhetorical, I know the answer. Okay. Biotech. biotechs are killing it. They're killing it. Now, I own some healthcare, but I didn't own specific biotechs. I mean, I own a little bit for here and there, some Gilead, and I actually sold Gilead at a profit, and I bought back a little bit today. But all in all, is biotech, which is typically a more, I'm sorry, I should turn my volume down. Biotech are typically a more speculative side of the sector. And we're going to talk about Moderna, which has really been in the news, and that's a question we have. And that is the question from, who asked that question? Oh, Charles. Charles in Altamont asked about Moderna. So we'll get into that in just a little bit. So, biotech has been great, and technology has been great. Now, the sectors that have been forgotten, and like I said, I made a good play in the energy play, but you can't put a ton in that right now because there's going to be some going out of business, and I have no idea which ones are going out of business. We just don't know. So I think healthcare, in general, healthcare has done well. So healthcare, biotech is flying, and tech. So let's get into a couple of things. Let's go to, okay, there we go. Let's go look at a couple of charts here. Okay. So I just want to show you, by the way, today, Amazon, which a stock that I own personally, a stock that we have some clients that could assume that kind of risk own. And let's take a look at Amazon. Look at Amazon. Amazon went down. This is that March 23rd low. And from March 23rd low, let me just tell you where it's going. It was under 1,700 there. We bought a lot at 1,800 and change. But if you look at Amazon, that one day, the trading range was on the low $1,626, the high 1,759. So from the close 1,689, the stock today closed at an all-time high. Jeff Bezos is just the freaking man at $24.97. So for all intents and purposes, let's call it $2,500. So let me do the math here, because I used to be able to do this in my head, but I'm getting older, okay? And I'm going to round off numbers here. So since the low of March 23rd, Amazon up 47%. From this move right here to that move right here, 47%. Okay, so ask me the question. Tina from Winter Springs. Thank you very much, Tina from Winter Springs. Is Amazon a buy right now? I have to tell you, I don't feel comfortable buying Amazon right now, only because, not the company really, it's because I don't feel so comfortable with the market. And I know, because I know the history of Amazon, and I know what happens in down markets, that this market is very news driven. What does that mean? Well, headlines are going to drive the market. So right now, people are optimistic there's going to be a vaccine. Maybe not a second wave of the coronavirus. But what if there is? And in addition to that, earnings are still going to be crap. Tomorrow, new jobless claims come out. It's going to be in the millions again, which is going to put us, of course, we know we're double digit. I mean, who knows what the unemployment rate is going to be. But, Amazon still is doing extremely well despite what's going on around us. Now, this is a stay-at-home stock, no doubt. And again, I just want to let you know, we have some clients that own it, but we own it down here. I bought it after, right in this area is where I bought it for clients, and here's where it is. That is fact. And I do own it personally too. So it broke out. Technically, it broke out an all-time high. And here's the thing. People say, well, it's at a 52-week high. Well, yeah, it's at a 52-week high for a reason. And it's normally a good one. So, all right, I'll give you my opinion on Amazon. I would have to tell you it's a hold here. If you own it, it's a hold. If you don't own it, I would look to buy on a pullback. Just last week, it pulled back into the 2300s. I didn't want to buy it because if you own it at 18, 1900, why do you want to buy it 23? Just me, okay? So Amazon, stock's just a horse. I mean, it is. And listen to this. There's speculation that Amazon wants to buy AMC theaters. Think about this. Why would they want to do that? Well, here's my feeling. First of all, AMC is struggling, as we know. They still haven't opened the movie theaters yet. But AMC gets access to brand new movies coming out. What if Amazon owned AMC theaters, and you still have movie theaters, but then also if you pay your $20, you can see the movie at home? I mean, and they're already starting to do that. Disney is doing it. So, I really truly think that Amazon's a hold here. Buy on weakness because it's one of the strongest stocks in the market. I'm just telling you not to buy now. Okay. Another stock that I do not own, and I've owned it 4 or 5 times over the last 5 years. Made money on it. I'll knock on wood every time, but I'm not in right now, unfortunately. And it's Facebook. I mean, Facebook has done phenomenally well. The only thing Facebook doesn't do well is they mute part of my Facebook Lives because I use other people's music. It's OPM. Come on. Anyway, this chart on Facebook, absolutely on a tear. And they're doing a lot of great things in the Facebook marketplace, and they're doing a lot of advertising. And as I said earlier, there's like 2.6 billion people are monthly users. It's enormous when there's 3 billion people in the world or something crazy like that. I talked about this a few weeks ago. But Facebook has just been absolutely on fire. This is so you know. All right. On March 23rd, the low, Facebook was at 140, call it $147. Today, close at 229. 147 to 229. Okay, I'm going to figure it out for you right now because, again, I'm getting old. 55% from the low. That's pretty freaking strong. So I wouldn't buy Facebook either here. I'm not a Facebook stock fan unless I really get it at a disjointed or disconnected price. That's just me. Sorry. They're probably going to mute my shit, but that's okay. If they do, then I'll just put it all on YouTube. But anyway, no, I'm sorry. I like Facebook. Okay. Too much shit goes on Facebook. Too much people act stupid. All right. So let's go over some buy, sell, or hold before we wrap things up tonight. And I have some questions. Nikki, please let me know if there's any additional ones. I'm going to rip that page out. We have some questions, and I'm going to use a different charting service because we could see it a little bit better. We have a question from Megan in Lake Mary. Megan in Lake Mary would like to know more about Take-Two Interactive. And the ticker symbol on Take-Two is TTWO. Megan is probably a millennial, and nothing against that, but this is a chart on Take-Two Interactive. They make video games. They came out with earnings. Their earnings knocked the cover off the ball. Keep in mind, this is one of those stay-at-home stocks. All of these gaming-type companies have been unbelievable, all right? Fundamentally, Take-Two has been very, very strong. Their last quarter, it was incredible. Revenues up 114%, earnings up 41%. They upgraded earnings guidance for end of this fiscal year, and that, all great stuff. I mean, it's not a cheap stock by any means, but you pay for that growth. So, today the stock was up big. It was up 4 and change, up 3 and change after hours because of earnings. But here it is. It's very, very extended. So, my thought is, I would rather, all right, it had a serious breakout when it cleared out those levels right there. That was a serious breakout. I would rather see it flag off a little bit and buy it somewhere around here. But I right now, again, it's neither a buy, sell, or hold, because if you own it, I wouldn't buy more. And if you own it, if you're a trader, meaning you're looking to take short-term profits, I'd probably sell it here. Okay? If you're an investor, let it ride. But I'm going to show you a couple things. This is Take-Two, but let's go with let's look at some of the other ones in that industry, because that's, I think, it's important to see. They're all doing well. Okay, not as well as Take-Two. This is Activision. Activision's made a strong move as well. I mean, look at that. Great move. It's right here. Now this is a little pennant. which means the next volume, because it hasn't had great volume lately, next volume that comes in is going to kick it right through there. Stock probably goes to 80, if that happens. So that's Activision. Let's look at, which I have friends that work there, and we did a gig for EA Sports. And EA Sports, it's coming out a nice little consolidation here. Their earnings, their revenue growth wasn't as strong. They were down a little bit. But I think, it all matters of what's the hot games, what's going on now. And, of course, everything is, interactive and virtual reality, that kind of stuff. But all this sector has done extremely well. Take-Two probably looks like the leader of the group. And now, EA, I wouldn't have a problem owning it down here, and that is about 114. Stock closed at 119, so I wouldn't have a problem owning it in the bottom of that blue area. That's pretty much EA Sports. Next question is from, I talked about this earlier, Charles in Altamont Springs. Charles, thanks for your question, and we'll be doing this every week too, a little bit of that. We'll probably end it with some buy, sell, or hold. Okay, this has been big time in the news lately. And these are one of these companies, and it's, again, remember I told you, the market is very news-driven, and it's going to be really surrounding about who's going to get this vaccine. Here's what I think. Take it for what it's worth. I don't believe there's going to be one company with a vaccine. I think there's going to be several companies come out with something. I mean, think about it. For cholesterol medication, several companies. High blood pressure, several companies. Gilead, AbbVie, J&J, a lot of these companies are working on things. And if because they're huge, if they don't find it, they will buy someone who does. So this is Moderna. Let me show you a chart on it. And this is the latest story of the last couple of weeks. And look at this thing. Down here, you could have bought this thing all day long at $20 back in mid-February. $20. Hit the high here of 80 and change. The last couple days have gone down because a couple of things going on with Moderna. 8 out of 45 of the patients in the trial. So it's still phase 1. It's early stages. They've had a higher neutral antibody. So which means is 8 out of the 45 is a little bit higher than they expected. So the stock was going up. Now it's pulling back a little bit. Keep in mind what they're trying to do. They're trying to develop a vaccine that will give someone the antibodies that would make them immune to the disease. So they're going to do a phase 2 with 600 patients coming up here July, I believe. I think, Nikki, you told me July it was going to happen. But so the bottom line is, this is a high-risk deal. If you own it, again, it's a hold. I gotta tell you, you're going to hear a common theme from me tonight because there's a couple things. I mean, only a few things I think I'd feel comfortable buying now. And I'll give you some of those. But again, they're not recommendations. But Moderna, ticker symbol is mRNA. I look, it's a biotech that's not making any money. They're out there trying to make their way here and see what happens. But again, I probably would not be. I wouldn't go and speculate with this. I'm nervous about it right now. All right, let's go to next one. Stephen Longwood wants to talk about Home Depot. You know what? I'm glad you brought that up, Steve, because I had some Home Depot that I bought after the crisis, and I sold it yesterday. And let me tell you, I sold it right here yesterday. Maybe I'm wrong. I don't know. Client made good money on it. And I'm not that concerned. I think the stock. Oh, okay, I got it. Okay, we'll address the other one. Okay, got it. Ben asks, how's the ship sale? Okay, I will address those. Nikki, I'm okay. I'll try and make it quick. So Home Depot, I sold it because to me it was more of a trade. I knew it would probably come back to up here. Look it up here. This is all kinds of resistance. Stock has a real problem getting above that 230, 240. I sold it yesterday around this price, 238, 239. So I think that Home Depot is a buy on pullbacks down here, which is the 50-day moving average. That will be around 220. Again, consult somebody, make sure it's appropriate for you. And we had questions on the airlines. I'm going to try and get these through these quick because Ben wants to talk about cannabis. And Ben, are you doing cannabis right now? I don't know. Are you? I have no idea. I'm just joking. Okay. We had a question on airlines. Okay, you guys ask me questions on airlines every week, or I get them all week long. I don't buy. I've bought in my 32-year career, I bought airlines a couple of times. Yes, they're probably the good ones are going to make it. Let's take a look at it. I mean, Delta stocks in the toilet. I mean, it's they're all in the toilet. Look, they're going to make it. Most of them, but some are not going to make it. I don't know which ones. So quite frankly, I wouldn't sell them now. I don't know. I wouldn't sell them. But I'm going to show you a stock here that I kind of think is interesting. Don't go out and buy it. It's called ChemMed Corporation. Really interesting stock. And they provide, it's the most interesting stock because they provide end-of-life hospice care to terminally ill patients, spiritual, emotional counseling to their families, et cetera, et cetera. And they own Roto-Rooter. I know. Anyway, I like it. It's an expensive stock. Not expensive by valuation purposes. Expensive by trades at $473 a share. Interesting, though. It's called ChemMed. I kind of like that. I'm going to give you another one I'm also looking at. Haven't bought yet, but AMD is trying to break out. AMD, if it's got a clear 58.63 with volume. I'm not seeing the volume now, but if it clears with the volume, that could be very interesting on a big, gigantic cup and handle right here, folks. I mean, that's a bottoming process I ever saw. Okay, so the last one we have Ben, and again, thank you guys for joining. And if we can help you in your investments, your portfolio management, love to do it. All right. If it works for both of us, okay, we can't take every client. We're not all things to everybody. We're all things to a lot of people, though. So let's take a look at. Ben wants to talk about the cannabis industry. Here's the good thing about the cannabis industry, besides the logical good thing about the cannabis industry. They're all bottomed. And they really, I think, want to go higher. This is Canopy Growth, which is probably one of the best ones in the lot. It's broke that downtrend. I mean, this is a downtrend that's gone way down here. Broke it, did it on great volume. They're due to report earnings here next week, I believe. But if it's anything like Aurora, which Aurora ACB, and by the way, we do own some Canopy for clients. I do own some Aurora. I do own some of both personally. Aurora has been an absolute abomination, but look at this volume spike when the stocks jumped up. They did a reverse split, 12 for 1. So what that means is for every 12 shares that you had, you now have 1 share, but they multiplied the price by 12 times. I just have a feeling. I think that the whole cannabis sector is bottoming, but it's extremely speculative and extremely volatile. So if you can't take the heat, this is not a kitchen you want to be in. All right. And I think that is all for today. You guys have been really awesome tonight, and I appreciate a lot of the questions. We'll be here every Wednesday. All right. I'm going to do it every Wednesday. Quite frankly, I kind of enjoy doing it. So we're having a good time doing it. But I just think that we've had these questions as far as stock questions, we can do that. We can do buy, sell, hold every week. By the way, check out our podcast. We'll drop it on Friday, and it's always great information. We're going to talk about what's been going on that week. And again, Seiler Wealth Management. I'm the stock doctor, also known as Lee Seiler. I really want to thank you guys for watching this, and please share it. And if we can help you, feel free. Don't forget our Shred Day. All right? Shred Day, 12 to 3. You literally can bring your neighborhood. I don't care. Seiler, out.